Welcome back, members. We have the second session on overseas investment paradigm, given new rules, regulations, and direction. To handle this session, we have CA Vivek Mallya, sir. Can I request our Vice Chairman, CA Pramodar Hegde, to escort Vivek Mallya, sir, onto dais and then welcome him with floral bouquet. Sir, yes. Centrally. Thank you, sir. I have privilege in introducing CA Vivek Mallya, sir. CA Vivek Mallya is a practicing chartered accountant, born and raised in Bangalore. He's also qualified. He's also qualified as an USA CPA and holds a master's degree from Mysore University. Prior to his practice, he has been a partner with a Big Four firm, as well as AVP Finance and India Advisory Board member in a large MNC. Vivek currently consults mainly on FEMA, income tax, international taxation, and is also an insolvency resolution professional. He is currently an independent director on the board of ONGC Tripura Power Corporation Limited, a natural gas-based power plant with India's best plant load factor and power to the 7 NE Northeast states. Vivek has also been an independent director on boards of Oil and Natural Gas Corporation Limited and Mangalore Refineries and Petrochemicals Limited, earning status as one of India's youngest board members in PSUs. Vivek has also been the national president of Keshava Seva Samiti, a Bangalore-based NGO, and is currently its trustee. Vivek has trained GST officers in Karnataka in banking and insurance, as a visiting faculty at Fiscal Policy Institute of Government of Karnataka, and has been a Board of Studies member of Wellinkar WE School, Bangalore. With this brief introduction, I present before you CA Vivek Mallya, sir. Over to you, sir.
Thank you, sir. So we have an hour and a half and quite a bit to cover. So CA Advocate Chidanandars will be there in the second half. He will speak about all litigation and compounding aspects in FEMA, and also external commercial borrowings and lending and borrowing under FEMA regulations. Some of it I will have to cover today. Sir is not feeling too well, so he asked me to cover some aspects of external commercial borrowing, which I will cover in the presentation either now or post-lunch, depending on how this session goes. So how many of us are practicing chartered accountants? Oh, thank you for coming in your busy season, no? So you're able to spare some time for FEMA. CP may push you towards it, but at least you've taken the initiative to come. Good. So let's see how best I can align this to how a practitioner requires knowledge of FEMA and ODI in particular. So Himanshu has been very kind in helping us with understanding FDI aspects of investments into India. So we'll now try and see what are the important aspects on investments outside India. One of the things he did talk about was about rules, regulation, FEMA Act. So he introduced us to the concept of rules, regulations, and non-debt instrument rules and regulations, which issued by a regulator, which is RBI. So let's, as a practicing community, we should know that there's a FEMA Act, rules, central government, regulation, regulator, RBI. So that, with this background, we'll proceed further. All of this is covered under capital account transaction. Anything which alters assets or liabilities of a person resident in India, outside India, or anything which alters asset liability of a person resident outside India in India is covered under capital account transaction, assets and liabilities. Now you would say, okay, so if I have contingent liabilities outside India, for example, I issue a guarantee in favor of my ODI sub company, that is also covered. Contingent liabilities are also covered under liability. So asset liability outside India, including contingent liabilities, capital account transaction, and that capital account transaction regulated under FEMA, regulated through rules. FEM in brackets, overseas investment rules issued by Ministry of Finance, Government of India. Now, implementation of it through RBI overseas investment regulation, prescribing the modalities of how the rules will apply as far as day-to-day transactions are concerned. Clarity given by RBI to bankers, authorized dealers, general public through overseas investment directions. A direction guides us, and it's a common, easy to use, allegedly, supposedly easy to use, user-friendly documentation for us to read, understand, and capture regulations on overseas investments. So rules, regulations, OI directions. So if we interchangeably use this, be careful, don't interchangeably use it. Rules, mandatory. Regulations, maybe some flexibility. Directions, interpretation by banker, because he's ultimately the person who will remit the transaction for you, or if money comes in, he will create it, keep it in a escrow account or in suspense till such time compliance is done, then he'll credit it to you. So as far as the bank is concerned, OI directions are his Bible. So easiest way to read ODI is through directions. It's the simplest way of understanding regulations. But for clarity, section 6(2)(a), central government in consultation with the Reserve Bank may prescribe class or classes of capital account transaction not involving debt instruments. Debt instruments are covered separately. Yeah. So ECB regulations for borrowing in India, lending outside India, borrowing and FEM, borrowing and lending, bracket close, regulations separately. Conditions which may be placed on certain transactions, limit up to which forex is permissible. For example, LRS, $250,000. For example, ODI, 400% net worth. All these limits are prescribed. Now the question may arise: if I'm a foreign national coming into India for the purposes of employment, and that employment tenure is less than 3 years, then I'm permitted to hold any securities which are held outside India when I was a non-resident, when I was a foreign citizen, or continue to be a foreign citizen, continue to be a non-resident. For employment purposes, I come to India, those holdings are not covered under overseas investment rules or regulations. Obviously, because it's from funds generated outside India, held outside India. The minute you cross the 3-year threshold, the minute the employee comes into India, including an OCI, who does not require a visa for stay in India, he can stay in India for an indefinite period of time. If the OCI is in India for employment or business or any other purpose, the minute he crosses the 3-year threshold, if fresh investments is made, OI regulations may apply. Foreign national, IBM, let's say I'll use IBM as an example, US national coming to IBM India for working in IBM India, crosses 3 years, then invests in a foreign company, OI may apply once the 3-year employment terms. So if you're devising employment contracts for a non-resident or OCI, devise it with this in mind. Be careful with this, okay? Now, central government obviously has the power to make rules under 46(1). We talked about that. Limits, we talked about. RBI may by notification make regulations. We talked about that, 47, yeah? So basically, in summary, capital account transactions specified by Government of India versus foreign security and immovable property. Now, remember, capital account transaction means anything which alters assets and liabilities of a person resident in India, outside India, which includes immobile property because it is an asset outside India. It includes guarantees given outside India by, let's say, a promoter of an Indian company having an overseas investment, or an Indian borrower who has given guarantee to a foreign bank, a personal guarantee covered under OI. A pledge of asset in India in favor of overseas investment covered. Let's say performance guarantee for a project executed outside India covered. Anything which alters liability or asset of a person resident in India, outside India, is covered either under OI regulations or FEM borrowing or lending regulations. So be very careful. Anything internationally which is happening, be it a guarantee, be it a pledge, be it actual investment, be it equity share, not debenture, convertible instrument, anything of any sort which alters the asset liability will be covered under either FEM borrowing or lending regulations or under OI rules and regulations. Okay. Prescribing rules or regulations we spoke about. The way the government writes it is prohibit, restrict, regulate. Where the RBI rates it, permissible, admissible conditions. So the tone, tenor, etc. You can know what is happening. So the mindset of what we talked about, FERA versus FEMA, all that is gone. FERA used to be a single manual. I still have that book, very valuable book, by the way. FERA used to be a single manual up to 1999. FERA manuals are very valuable. That manual was all encompassing. Anything which is not in that manual is not done. Anything which is within that manual is done. So life was simpler. This has 2 volumes now, as bigger than FERA, twice the amount of FERA, but still we are confused. Still, even I'm, after all, I've practiced now for 26 years in FEMA. I still sometimes don't understand what the bank is asking me. I deal with certain examples at the end of this presentation of what the bank is asking me and why I'm failing to understand what he's asking me. Yeah. And mind you, it's all chartered accountants on the other side also. Bankers also, the person who manage these transactions are also chartered accountants. So all of us are confused. It's not, yeah. So in summary, sorry, sir. Compared to FERA, FEMA is disastrous. I'll tell you, for example, there was no brainer. We used to have multiple remittances for royalty. Kudremukayan, or you take companies, ITI, BEL, BHL, all PSUs used to have multiple remittances for royalty, and they used to come to one of the big 4 firms those days because it used to be an international transaction and they were unsure of what has to be done. So when we started our career in 98, 99, very simple. Go to the RBI, go to the ground floor, get TR6 challan for research and development cess. Then go to the first floor, obtain license. He will say, I will not give you license unless there is a withholding tax certificate under 195. So go to Infantry Road, Queens Road, go get a 195 certificate, but get that certificate. So TR6 challan for R&D says withholding tax certificate, go to first floor RBI, you got a license for remitting, matter over, close. So you had 3 documents, remitted, closed. Never again will that transaction be revisited. Never again will the transaction be revisited because there is a license and that license guaranteed you remittance. Today, I make a ODI remittance. Year 1. Year 5, bank will suddenly send me a mail saying, have you filed FLA for all these years? Year 5, bank will say, give me a copy of the original remittance document. Have you, enclosed CA certificate? 5 years ago. Year 5, the bank will say, unless you give me all APRs for the years in between, I cannot make another remittance. You sell that damn thing. Money has come in, it's sitting in Nostro account. It will not be credited till such time you give all these documents again to him. He's supposed to maintain it. Sorry? Sir, my real remedy, sir, in another 3 years, I have decided this no more practice. Something else in life than this. I'm 100% clear. This is not what I will want to do. Sir. Okay, don't instigate me, sir, please. Huh? These are all recorded and I know who is watching. May I get in trouble with so many times with people watching, and anyway, such is life. So, if you want to understand overseas investment regulation, these are the things which you need to keep aware of, because going into battle, you should be aware of what you're confronting, especially when you take over files, especially when you're doing audits. A lot of legacy comes. You'll be very surprised because innocuous CA certificates will be asked when you are making APR certifications. APR has a column for CA certificate. Okay, I'll come to that. As a chartered accountant, in practice, if you're signing a CA certificate for ODI compliance and or are signing a CA certificate for remittance and or for divestment, please look at these regulations, okay? As it applies today, everything is grandfathered into these things. OI rules, we know, it's 21 rules, quite rather 30 odd rules, quite simple. It's not very complex, but remember this. OI regulations issued by the RBI repeats what is there in the OI rules, but clarifies in a little more detail. Repeats what is there in the OI rules, clarifies in a little more detail, transaction-wise. Definitions remain in rules. Definitions are vital. We'll go through some of them. How it has changed the paradigm of ODI. We'll go through some of them. OI directions, especially if you are dealing with interacting with the bank, remember instructions to authorized dealer in OI directions is all he looks at. Instructions to bankers in OI regulation directions is all he looks at. So look at those instructions to authorized dealers, because that is the language he is speaking. So if you're dealing with a bank, that is the language he is speaking. Your client is dealing with the bank, that's the language they are speaking. Immovable property regulations, if you're having immovable property transactions outside India, holding it for an office, for a branch, yourself investing in an immovable property outside India, by yourself with relatives in India, jointly accumulating, aggregating LRS limits, or with relative outside India, all of these are covered under OI regulations. Yeah, rather MD, master directions and immovable property. LRS, most abused for overseas investments. Zero compliance generally when it comes to almost every time I've seen LRS, compliance is negligible. For example, even under LRS, you are required to file APR if you have more than 10% shareholding. APR is not filed. Even under LRS, if you have divestments, you need to have a valuation certificate on the other side. Those things don't come. Money comes in suddenly and it has to be credited and then you work backwards. The bank believes that CA certificate has to be date prior to the date of transaction. That is on the other side. You agree a value and then you transact. Whereas it happens the other way around. You transact and then you discover the value. So be very careful with dates. Credit to your bank will become difficult. The other thing is filing audited accounts. OI, under LRS, if an individual is investing outside India, audit is not mandatory. But if the balance sheet is anyway audited, you have to file it along with the APR. Not audited, CA certificate has to be given at least. So when you are a CA asked to certify this, be very careful because you don't understand what gap is there, what you are doing with that accounts, what you are expected to do with that accounts when you submit it as part of APR filing. My usually go-to is SRS 4410, which is compilation. I just compile the accounts and I give it. I don't do an audit. Compilation is very clear that it's not an audit. It's a compilation of financial information provided with it. Do a compilation, cite SRS 4410 and be done with it. Do not do anything beyond it. Luckily, today banks don't understand compilation versus audit. Tomorrow when they figure out, maybe you have to figure out some other solution. But right now, S4410 is good enough. Yeah. Master direction reporting. Most of the answers which we need on a day-to-day basis are there in master direction reporting. You'll be surprised. There's a form in master direction reporting, instructions to fill the form. The instructions are fantastic. Spend time reading it. Every time you sign a form, we fail to read the instructions, but the instructions in Form FC, instructions in OPI, instructions in API are excellent. Clarifies almost all your doubts. For example, we had a doubt in the earlier session, what is step-down subsidiary? How many layers? Very clear. FE, level 1, India, invest in overseas investment, FE, foreign entity. Below that, SDS 1. Below that, SDS 2. Below that, not permitted. Simple. It is there in the Form APR instructions. FE, SDS 1, SDS 2, full stop, no more. Below which you need permission. Yeah. Is there possibility of going below which? You'll be surprised. There is. Especially when you have investments in jurisdictions like Africa. They will not trust Dubai. They will not trust Singapore. They will want Mauritius as a holdco. Why? May not be for tax. It will be for investment protection. If you go into a jungle, you need the lion with you. Investment protection agreements are the lion. So that if something goes wrong, the investment is protected. 30-35 countries Mauritius has an investment protection agreement with. Seychelles has with 30 countries. So those are jurisdictions preferred to go into Africa. So they'll force you to create SDS for investment into your subsidiary. Most funds will force you. So then you create a layer. The minute a layer is created, you should worry about, do I need to report this layer? Yeah, we'll deal with all that. Okay. So look at instructions in each form. They give you clarity, beautiful clarity on each circumstance under which you need to report, how much to report. Let me see if I can pull up some of these forms and I'll show some examples of what challenges we face, especially APR. APR is a nightmare nowadays to file. Okay. Here, when I'm covering this, let me cover this. In APR, every year you file annual performance report. Have you heard of it, APR? All of us, no? Okay. So I have an investment in overseas, ODI investment in a foreign jurisdiction, a foreign company. Let's assume that the company is in UK. I have to file APR. I am a below 10% holder. Under the erstwhile regulations, I was a ODI. Under the new regulations, I am something called new animal called overseas portfolio investor. OPI does not require APR filing. Regulations clearly say that, including APR instructions clearly say that, but bank insists. Why bank insists? Bank insists because they are uncertain of what your holding is. For example, APR first column says Indian investment, amount, percentage. Foreign investment, which means the other party, all other parties put together, other than Indian entity or other than Indian party. Amount, percentage. That percentages are dynamic. If a third investor comes, your share may be diluted. Correct? You are with me? Yes? No? Repeat. You are with me or repeat? So if I'm holding 9.9%, new investor comes in, I may be 9.6, 9.5, 8.5. A new investor comes in, I will never be 10 and above. Under normal circumstances, unless the balance sheet is restructured. There is provisions for balance sheet restructuring as well. Under what circumstances balance sheet can be restructured outside India. But bank will not know what is your holding. So they will insist on APR filing. So when you are filing, be careful. Multiple occasions, I've seen that one of the common grouses of banks is the percentages keep changing year on year. It is never constant. You may think it is constant, but your agreement you would not have read. If somebody else comes in, you'll get diluted. So every year, a chartered accountant requires a confirmation of percentage holding, value of initial investment, value of premium recorded in the overseas books, leading to percentage holding before he signs off the APR as Indian party percentage holding. A lot of times it changes. Do not assume it is the same. Especially when there's movement in share capital from previous year to the current year. You'll have previous year data also. When you see the audited accounts or unaudited accounts on the other side, look at if there's any change in share capital, your share holding may change or vary. So when you're signing APR, do not assume what is last year is cut and paste this year. Nahi hota aise. So FAQ and LRS, good FAQ. I've cited this. Google will give you most of this. Okay. FAQ on immovable property outside India. There's a FAQ on FLA. FLA also has a FAQ because a lot of trouble filing FLA. Data contained in FLA is also very confusing. So look at these FAQs, they more or less clarify. Okay. Now we'll go at OI rules first. Okay. Schedule OI rules, 21 rules, 5 schedules. Schedule Indian entity, ODI by an Indian entity. Indian entity is company, LLP, or Indian registered partnership firm. Unregistered partnership firm cannot do ODI. Yeah, unregistered partnership firm cannot do ODI. OPI, below 10% holding in foreign entity. Did I cover definitions? Yeah, okay. Oh. Okay, we'll cover definition. Okay. OPI by Indian entity below 10%. Not only below 10%, no control over management and affairs. OPI means holding below 10% and lack of control over management and affairs of the foreign company. So two confirmations. I have 8%, but I can appoint the entire board. I have 8%, but I'm a bank signatory, single. I have 8%, but all decisions have to be approved by me. Hiring, firing, new projects, etc. No, then controlled access. So, yes, below 10% in unlisted entity overseas is also considered OPI. So look at clarification or the confirmation on control and holding, not only holding. Don't go by 10% alone. Resident individuals will deal with this quite extensively because that is becoming more and more common and a lot of challenges here. You'll be surprised. Kannada ellaru barata. Singapore hogide sir, allu ollobru chartered accountant tumba chennagidru sir avaru. Ardha gantele company incorporate ಮಾಡಿ ಕೊಟ್ಬಿಟ್ರು. In half an hour incorporate company and gave me. ಹೌದಪ್ಪ ನೀನು ದುಡ್ಡು ಹೆಂಗ್ ಕೊಟ್ಟೆ? ಕ್ಯಾಶ್ ತಗೊಂಡಿದ್ದೀನಲ್ಲ ಸರ್. It is common. That is disaster. So the minute this happens, the practical aspects of it, if the minute this happens, you should just wash your hands of this. It's impossible to sort. It is possible to sort, but too much time and effort. Yeah. Ideally, if you're incorporating a foreign company, it should necessarily always be incorporated by two people outside India. Incorporate the company, law firm, accounting firm, two people who are just somebody in the firm, whatever. We as ODI or OPI investors make a proper remittance through Form FC, get UIN, then make remittance. Now the change is get UIN, then make remittance. Earlier it used to be make remittance along with ODI part 1, UIN would be naturally applied for. Now obtain UIN, finish KYC, then make remittance. And then acquire those shares of the foreign persons. Sorry, sir? Incorporation? Incorporation expenses is easy. Current account transaction rules, make a remittance for consulting, quite independent of this. If you are acquiring equity shares, compulsory convertible preference shares, convertible debt instruments, fully compulsory convertible. If it is not compulsory convertible, then it's a debt instrument. Debt instrument, individual cannot make investment under ODI. No individual is allowed to give debt in favor of foreign company. He can give guarantee as promoter, personal guarantee, but he cannot do debt investment outside India. So you cannot structure issue debt to issue equity. That cannot be done. So it should be incorporated by two individuals outside India. A remittance should go to those two individuals in the proportion which they hold, 50-50, whatever it is, and get your shares as transfer. It's the easiest compliance. Subscription to memorandum and articles, impossible in Singapore, in Mauritius, in UK, in USA, impossible. You cannot be a member in a LLC in the US and then make a remittance for incorporation. Not possible. You have to have that money, $100 there, or somebody has to put on your behalf. So usually let it be incorporated, you buy it out. That's the simplest, cleanest way. After all these years, I realize that's the simplest and cleanest way. Use two people outside India, buy it from those two people. Impossible to comply otherwise. Other than IE, RI, other than Indian entity, other than resident individual, some trusts, education institutions, hospitals have been given some leeway that is covered under Schedule 4. OI in IFSC by person resident in India. IFSC is International Financial Services Center in where? Gift City, Gujarat. That is Haven. That is Las Vegas. No FEMA. FEMA doesn't apply inside that box. That Las Vegas was supposed to be in Karnataka, was supposed to be here first. Karnataka and Gujarat applied. No wonder why Gujarat got it. And Karnataka still is figuring what we have to do. Our people are going there to register, register everything. Anyway. Bangalore city. Apply agittu. Google Deccan Herald, Gift City, Bangalore, Ahmedabad. You'll say you get a lot of answers. And anyway. So that is Las Vegas. Las Vegas, everything open. Anything can be done there. So some important definitions, okay? Control. Again, we dealt about this. What is control? So OPI, if you have control over the foreign company, ODI. If you have control less than 10% shareholding, ODI. If you have less than 10% shareholding, no control, OPI. Okay. So control, what is control? Right to appoint majority directors, control management, policy decision exercised by a persons acting individual. Acting in concert, definition is also here, okay? Divestment, important, definitely will deal with this. Financial commitment, this is important. Why financial commitment becomes important is, this is the total exposure with a Indian individual or Indian entity has abroad vis-a-vis a company or a LLC or LLP outside India, which he has incorporated or which he is setting up, or it's a step down and all that. Complete financial exposure of the Indian entity, Indian group, sometimes Indian individual towards a ODI investment or OPI investment. Aggregate value of investment made by a person resident in India by way of ODI, debt by corporate or Indian entity outside India, debt can be given. We deal with that. OPI, other than OPI. Which ODI? Okay. OPI has separate regulations. ODI has financial commitment. OPI has 50% net worth is the maximum exposure you can have vis-a-vis OPI, whereas ODI has 400% of net worth financial commitment which you can do. So be careful of what is being, why this OPI is being excluded from here. Foreign entity means entity formed, registered, incorporated, you know that, including in IFSC. Okay. If you set up a IFSC AIF for family offices, that has to be registered as ODI or OPI. If I set up a IFSC unit inside the IFSC, okay, GIFT City is SEZ. Inside the SEZ is IFSC. Going into IFSC is ODI. Going into SEZ is domestic investment. So GIFT City doesn't mean GIFT City. Lot of misconceptions. Lot of fraudulent incorporations. You will not get any benefit under FEMA if you're in GIFT City. You'll get benefit under FEMA only if you're an IFSC unit and qualifying as such. Who gives you? GIFT City Authority. Presentation has to be made. Very quick incorporation. 45 minutes, you are done. But you have to go into IFSC for exemption from FEMA, not into GIFT City. So there are two different things. Yeah. So be careful on that. Why? That has limited liability. Obviously, the company outside India or for limited liability partnership outside India or limited liability corporation outside India can be incorporated. Unlimited liability is not permitted. Obviously, because exposure is not, you can't map the exposure. If you can't map the exposure, you can't know the commitment the Indian party is making. So unlimited liability is not there. It is exempted for certain strategic sector like oil and gas, like mineral ores. Startup is there in the definition of strategic sector, but be very careful with startup. We'll deal with some outside India. I'm not talking about startup in India. I'm talking about startup outside India. There are certain challenges vis-a-vis startup outside India. So there's no unlimited liability possibility for startups for certain other regulation. Indian entity, we are clear. Unregistered partnership is not there. Financial commitment is mapped vis-a-vis latest audited balance sheet. Not exceeding 18 months. Nowadays, balance sheets are taking years to file. Even listed companies are not filing balance sheets. Can you believe? So 18 months, that's why maybe this 18 months is the vintage of the balance sheet for FDI, ODI purposes. Net worth shall have the same meaning as per Companies Act. So free reserves plus capital plus premium. For LLPs, there's a definition. ODI means, so okay, we talked about financial commitment. Now, ODI is defined. Investment by way of acquisition of unlisted equity capital of foreign entity or subscription of memorandum and association or investment in 10% or more of the paid up equity capital of the listed entity or investment with control where investment is less than 10%. We talked about this. If investment less than 10%, it can still become ODI if you have control. OI means financial commitment and OPI by a person resident in India. OI means ODI plus debt plus financial commitment plus OPI. OI means ODI plus financial commitment plus debt plus OPI outside India. Anything outside India plus immovable property is OI. Sorry, sir? No. Commitment means guarantees, pledge, performance guarantees, and I forgot one more. 4. Okay. So it's not guarantee only. Okay. Pledge also is covered. I pledge shares in India for raising funds outside India for my subsidiary. I pledge subsidiary shares for availing debt in India, excluded from financial commitment. If the debt is directed towards Indian entity, anything pledged overseas is excluded from OI, financial commitment. If the debt is for overseas entity, covered under financial commitment. Anything pledged in India or outside India, financial commitment. Repeat. That is the last one. Unpaid portion of. It's correct. Not a problem. Yes. Any liability which is denominated in foreign currency outside India. Sometimes liability may be denominated in foreign currency in India, excluded. For Indian entity, excluded. For overseas entity, included. Yes. Okay. Another important thing. Okay. Financial commitment means the entire commitment which an Indian entity, sometimes it's group is making in favor of an overseas company. I'll use the company for simplicity. So I have set up a company in the USA. US company is raising a loan from Bank of Baroda, New York branch. US company is raising a loan from Bank of Baroda, New York branch. It says, I need corporate guarantee of the parent, covered under FC. Parent is okay. I need corporate guarantee of the promoter group entity, which is profitable. Guarantee. Promoter group entity giving in favor of Bank of Baroda, New York for main company's subsidiary, covered. I need personal guarantee of the promoter, covered under FC. I need a pledge of asset in India, covered under FC. I need pledge of shares of this company in India, covered under FC. I need pledge of SDS shares, covered. Everything which you give for and on behalf of, for the benefit of the overseas, this thing is FC. Sometimes I'm an Indian company, I have a subsidiary outside India, doing very well. Indian company is struggling. Indian company raises debt from Bank of Baroda. I pledge the foreign company shares, not covered under FC. Because benefit is to Indian entity. Loan is by Indian entity. So be very clear of the transaction. So as long as you're clear on the, who is the beneficiary of the debt, underlying debt, partly paid. Nowadays, ODI can be made in deferred payment terms. ODI can be made in deferred payment terms. 100 shares into $10 equals to $1,000. Earlier, I would have remitted $1,000 and acquired the company. Today, I can say 100 shares into $5, $500 I can remit today. Valuation agreed upon today. Control agreed upon today. Conversion factor agreed upon today. Payment of $5, 1 year ends or 2 years, whatever it is, tenure based. That $5 also is covered under FC commitment, because someday you have to pay that $5. Okay, so the minute you sign this agreement, it is a commitment. So all this put together has to be within 400% of net worth of the Indian entity only. Earlier it used to be Indian entity plus holding company. Now only Indian entity, standalone. No consolidated financials. That change happened under OI regulation 2022, August 2022. What happens to the prior ones? Unsure. So if the rule, if you're violating a rule and giving guarantee, it's on both sides. Bank is also challenged. We are also challenged. So be very careful on if you're exceeding that 400% standalone net worth. Yeah. So resident individual is a natural person, no HUF. LRS, is it available for HUF? No. Can HUF do ODI? No. Yeah. So rule 4, when does ODI rules when ODI rules do not apply? Investment by a financial institution in an IFSC. International Financial Services Center is for financial institutions only. For example, there is alternative investment fund set up. Many companies have set up. I can participate by virtue of buying units in that AIF, family office. They will invest abroad without FEMA applicability. Buy, sell, trading, algo trading, whatever you want, they'll do. Benefit I will get. For me, it is ODI or OPI, as the case may be, depending on whether I have control, whether I have 10% or more. But FI in IFSC, FEMA doesn't apply. For that institution, FEMA doesn't apply. Acquisition or transfer of any investment outside India made out of RFC account. Resident foreign currency accounts, funnily enough, are applicable to all residents who earn foreign exchange. I have not seen a case. Technically, if I have a foreign, as a chartered accountant, I have a foreign client. Question is, can I open a RFC account? The answer is possibly no. The reason is, if I have a practice, it has to be a current account. It cannot be a SB account practice. A practice, individual proprietor, has to be a current account practice. It cannot be a savings bank account practice. Individual earning on his own merit, SB account based, RFC they open. If I have a current account, they struggle to open a RFC. But if I have RFC, I can make OPI, ODI with no FEMA applicability, no IPR, no Form FC, no nothing. Yeah. So acquisition or transfer of investment outside India out of foreign currency resources held outside India by a person who is employed in India for a specified duration not exceeding 3 years. We talked about this. The minute 3-year employment of a foreign national or a OCI is completed, FEMA applies. For monies which is maintained outside India, evidenced as such, no problem. But if you remit something from India, then FEMA applies. Remit something from India to his personal bank account outside India, which he is allowed to maintain as a OCI or as a foreign citizen, and from there ODI is made, FEMA applies. The rule exemption is over the minute 3-year employment is done. So if you are advising any person, your brother, sister who is coming back to India, take employment for 3 years and go back, or take employment for 3 years and then comply with Indian regulations, as all of us Indians do. Yeah. Acquisition or transfer made outside India in accordance with 6464 is general exemption. I think I put it somewhere here. A person resident in India may hold, own, transfer, invest in foreign currency, foreign security, or immovable property or situated outside India if such security, currency, property is required, held when he was resident outside India. So if I was a resident outside India, if I was a non-resident, as far as FEMA is concerned, and I held certain property outside India, be it currency, be it bank accounts, be it immovable property, disposition of which and reinvestment of which is not covered under FEMA. Yeah, repeat. Reinvestment outside India. So let's say I'm an Indian national. I am in Dubai for 20 years. I worked in Dubai. I earned in Dubai, maintained bank account in Dubai, acquired immovable property in Dubai. I came back to India post-retirement. I still have property in Dubai. I still have investments in Dubai. I sold one share, bought another share outside India, not covered under FEMA. I sold a share in India, acquired another share in India, covered under FEMA. Once you come back, become a resident. What is a resident under FEMA? Very important. FEMA definition of resident, a person who comes into India and stays in India for more than 180 days or uncertain period of time by virtue of business, vocation, employment, day one. Business, vocation, employment start in India day one. Otherwise, 180 days. So be very careful about resident. The minute you become resident, your NRO account becomes SB account. NRA account becomes SB account. Dollar balances can earn interest, but no further funds can be put in NRE. Be very careful. Banks will not tell you this. You'll discover this after a few years. Yeah. So be very careful. And you'll still claim income tax exemption. All of these triggers. You still claim NRE exemption for interest. Be careful on all that you're doing. One minute you become resident, NRE becomes inoperable for further investment. The minute you become a resident, within 6 months, you have to intimate the bank, convert NRO to SB. Or if you go outside India for employment, convert SB to NRO. All of this you have to do for our clients. Yeah. So be careful on this because the problem with FEMA was clear. Idu madakagala ashte. Idu madbekare ee 10 kelsa madu agutte. Here unknown. You cannot remedy a situation which has happened 5 years down the line. I became a non-resident 5 years ago. I became a resident 5 years ago. I'm OCI, sir. I've been staying here for the last 5 years. Children education. NR account is still running, sir. How will you fix it? Yeah, so be careful. Just when in US, there's a profession of immigration consultancy. Immigration consultancy. So if you're going to USA, end to end, tax to burial ground. Everything is covered. No, really. The minute you go there, if you are Christian, Muslim, or burial, you have to book for a place. You can't go and die easily. You have to be cremated. So everything has to be done. Immigration means end to end. Similarly, at some point, as chartered accountants, we need to advise them. Once you immigrate into India, the first time you see a return, ITR, which is of a person coming back into India, all these triggers should happen. Is he resident? Is he non-resident? He holdings outside India. When should you disclose holdings outside India? How much should you disclose? All of these things should trigger. And other way around also. Brother, sister going outside India for employment, children going outside India for education, employment. Education exempted. They will never become non-resident by virtue of education. By virtue of work, vocation, business, they will become. Visa matters. 180. Financial year. They use the word financial year. During the year. FEMA is current. FEMA is not postmortem. Income tax is postmortem. Yeah. Yes. EFC is an export earners foreign currency account. Limitation on how much you can credit to the account. It's 50% of your certain conditions are there. Reutilization conditions are there. Within 9 months, you have to 270 days. You have to convert it into after alternate month. You have to convert. Receive within 270. All those things apply to exporter. RFC is for individuals only. It is quite different from 100% of export proceeds can be credited to RFC. Consulting fees, not goods export. Consulting fees, lawyer fees, all of these can be credited. Engineering consultants, architectural consultants, all of those. Only for individuals. Either EFC or FC account, foreign currency accounts. So where was I? So rule 4 we talked about. Rule 4 is repeated here, I'm sorry. Rule 5. Why non-debt instrument definition here is there here under ODI rules? I have failed to rather may make sense. Why debt instruments is here also may make sense, but it's just defined here. FEM debt non-debt instrument regulations defines debt and non-debt instruments. It's repeated here. What is a debt instrument if you are making an investment outside India? What is a non-debt instrument if you are making outside India? Stocks, equity, bonds, convertible bonds, exchangeable bonds. All of these can be ODI. Convertible bonds, exchangeable bonds. I am a company. Let's say I am. This happens in public sector. I am ONGC. I want money for a project to be executed in Mozambique. Foreign currency, convertible bonds. Convertible into shares of ONGC listed in Indian exchange. By the way, I have no approval. I need the money. Foreign currency, exchangeable bonds. I will give shares of my subsidiary, MRPL. I will give shares of HPCL, my subsidiary. Exchangeable bonds, listed company shares. All of this is possible if you want to raise funds. So FCCB, FCEB, all of these are covered under ODI. Where was I? All, if investments are made under earlier regulations, it is grandfather. It continues under the new regulations, status quo maintained. Compliance not done under old regulations, there is a window of compliance under the new regulations, which means from August 2022 plus 3 years, 23, 24, 25, August 2025, within that all APRs not filed, all FLAs not filed, all divestments not reported, all of this can be compounded with payment of late service fees or rather late submission fees only, no compounding. So this 3-year window is currently ongoing because of grandfathering of older investments into new investments. So if there's any non-compliance or no, now it's a good time to regularize. I'll talk about that when we come to this. Rule 7, I have ODI outside India. I have OPI outside India, properly held, UIN available. Bonus shares are issued to me, obviously. That also gets credited to my account, no reporting required. But APR, change in percentage, report, post facto. No reporting required within 30 days for divestment, change in holding. That regulation does not apply for bonus shares. Only APR reporting is good enough. Rights issue, subscribed, no problem. APR reporting only, end of the year. Rights issue, non-subscribed, handed over, or rather unclaimed, no reporting required. Not even in APR because your shareholding percentages don't change. Rule 9, conditions applicable to all overseas investments. Bona fide business activity. There's a definition for bona fide business activity. It has to be an operating company in a lawful business in India and or host country. Okay, this confusion is bona fide business activity means it's operating company engaged in lawful business. Which lawful business? A lawful business which is in India and or overseas entry. Gambling. Specific prohibition. So you cannot invest in a gambling company outside India under ODI or OPI because it's not a bona fide business entity, business investment as far as India is concerned. And ODI regulations specifically prohibited. A lot of other activities which are corporatized, which may not be lawful in India, you cannot invest in. Game of chance, game of skill. All those definitions still in play, but after the amendment now under GST regulation, game of chance, game of skill, all same, all illegal, all legal, I don't know. Yeah. So be careful when you're doing investments in this. Dating sites. You'll be surprised how many investments are going from India in dating sites outside India, OPI. Be careful. So, in directly or through step-down subsidiary or SPV. Okay. SDS, SPV. SPV, no definition, as usual. Now, why would you create a special purpose vehicle? The only traditionally or internationally accepted SPV definition, in the US, there are some definitions for SPV. Special purpose vehicle for certain acquisition of assets, for certain transactions which are to be routed. For example, bidding. I want to bid in a asset reconstruction as an asset reconstruction company for a troubled asset. I want to bid for some project. Then I create a SPV. SPV has a useful life. Once the useful life is completed, SPV collapses. There's no definition for SPV. SPV is not a holding company. SPV, to my mind, is not a holding company. While you may create a holding company with step-down subsidiaries, not under the SPV definition. Be careful when you're writing SPV. SPV is transaction-specific, intention-specific, special purpose vehicle, not holding company. I have a holding company in Dubai, going to Africa, going to Middle East, going to Far East. Okay, no problem. But that is normal operating company, trading company, holding company, whatever it is, not SPV. So don't write SPV unless you understand what the transaction is. Subject to limits and conditions in these rules and regulations, obviously. Restrictions for investment, transfer, swap involving. Okay. I invest in an ODI company. That ODI company issues shares to a Pakistan company, acquires shares of Pakistan company, and therefore I have Pakistan subsidiary circumventing Indian ODI regulations. Happens? Do you think it happens? Happens. What happens in Dubai stays in Dubai. There are more in India, in Dubai, Indians and Pakistanis are the best of friends. Really, I'm surprised. Every driver I've got in the last 8 years is Pakistani. And from to NWFP or Balochistan, never from Punjab or Sindh. For what reason, I don't know. They will be allotted. If an Indian is there, either Baloch or NWFP person, Pathan is allotted for Indian driver. Best friends. A lot of things happen. Onion, no tomato, everything they will trade. This happens. So be very careful. This is normal. So if there is a swap transaction, that swap transaction is usually reported in Dubai, Singapore balance sheets under their gap now. Be very careful with swap. No. If I don't know, if I'm unsure, right, to RBI for non-strategic investment, for RBI for strategic investment, or for central government for strategic investment. RBI YSAs, for example, banking, insurance advisory. For example, there are, what do you call it? A lot of these companies like surveyors and loss assessors. It is insurance business under the IRD regulation, ancillary. So if I'm investing in a surveyor loss assessor business outside India, clarity better. Banking, credit rating agencies, credit, I help other companies raise funds. Be very careful, clarity required, right? Strategic sector, anything to do with mineral ores, any mineral exploration, any investment in oil and gas. Oil and gas, discovered small fields. Even Indian nationals can invest in discovered small fields in oil fields in India now, as long as they have 10 crore in a balance sheet. Bid. Ready oil field, just pump and ship. DSF is there. Similarly, outside India also, you can buy fields. So anything which has to do with strategic, right to central government for permission. Don't take the risk. Minerals, anything to do with minerals, trading, buying, selling, acquiring leases, right to central government. If I'm a resident individual, my corporate balance sheet is a non-performing asset, or there is a ED, CBI investigation ongoing, then I need NOC for making ODI, further ODI as an individual, or other group companies, where I am the promoter, I am the main director, managing director or director. Then you need to obtain NOC from these agencies, apply to the NOC agencies. If they don't respond within 60 days, approval is presumed under the rules itself. 60-day time limit is given to the agencies to respond. Bona fide business activity talked about. Subscription to memorandum of articles, memorandum of association, equity, listed, unlisted, acquisition through tender, bidding. Many times people open escrow accounts outside India for bidding in troubled assets outside India. Shares of troubled assets, just like IBC. We bid for assets in India. Similarly, assets outside India also bid for. EMDs are also covered under ODI regulation, earnest money deposits, for participating in the bid or tender process. If I am unsuccessful, within 90 days, the money has to come back. If I am successful, then the transaction has to be reported as part of your FC reporting. With money sent as EMD, money is now sought to be remitted and UN applied for. Financial services sector. If you are engaged in financial services sector in India, there are only two regulators, SEBI or RBI. Registered with SEBI as a AIF, venture capital fund or whatever, or with RBI as an NBFC, only then are you permitted to invest in FS outside India. Sir, I only invest in overseas stock market through my subsidiary. I only invest in overseas stock market, algo trading through my subsidiary. That is also covered under FS, because more than 50% of the balance sheet of the asset, or balance sheet of a company, is financial assets. NBFC law applies in India. Therefore, you should have got an NBFC license in India. Absent this, algo trading business may be covered under RBI license, RBI approval route. Plus, there is 3-year profit criterion. COVID, there's some exemption for 2 years. You don't need to have those 2 years. You don't need to have profits. No individual is permitted to invest in debt and financial services sector, banking, insurance. Yeah. What? Casino business. Gambling. No, gambling is specifically this thing. No.
That is, he said, banned in India. But can I do a betting business in UK? Legal ban.
Betting, prostitution, prohibited magazines, all of these are a no-go. Bank won't remit, no, sir. So if you want to do ODI, you have to apply in Form FC, give KYC of the company, business it is engaged in, CA certificate, how many shares, number of shares, valuation certificate, everything you have to give, where your business is entailed. If all of this indicates towards a casino involving gambling or prohibited sector, bank won't remit. Correct. Okay, if there's a doubt, betting, football betting, go to RBI, obtain permission, invest. Why? I'll tell you. Obtaining UIN, RBI clearly says, obtaining UIN is not what they say. They use I forget the exact wording of it. If you see the mail when the UIN comes, it is only recording the transaction. It is not to be construed as approval of the transaction. When you file your APR as an operating business, engaged in certain sectors where there is doubt, then the bank will come back to you 1 year down the line. Then the original investment itself may be treated as null and void. Two things will happen. If the original investment is treated as null and void, two things will happen. They will ask you to divest within certain time, usually 30 to 60 days. Then they'll say repatriate all these proceeds back. The minute you do that, and believe me, when that comes, the person who is buying it will buy it for pennies to the dollars or paisa to the rupee. 10 paisa for a rupee, he'll buy. Then you have a problem because your valuation is saying 1 rupee, whereas you're able to recover only 10 paisa. You find a violation. So, any sector where there is even an iota of doubt, to protect your investment, write to the RBI. If the RBI say, get out of here, this is under automatic route, matter over. If the RBI says, this is not permissible under these regulations, matter over. As a chartered accountant, better to get this done. Do that 15-day, 20-day, 30-day job of running around, better than waiting for the answer 2 years down the line. Okay?
I say investment in the can came at 6 months to get the run very high. Bottom line is completely.
No, I didn't get you, sir. Correct. Okay. Safe. Then I heard another term in between. I'll tell you. Huh? Sorry, madam? FISC. I heard that. I heard another. Well, I'll tell you, it was a very big thing. I forget. They consolidate monies. Not syndication. It's a beautiful term. Americans use some fantastic term. I'll tell you, it's such a beautiful term. SPAC. Special Purpose Acquisition Corporation. Now, Government of India also wanted to do SPAC. Put together money. If it delisted, or other, if you put together money and we reach enough size, we bid is successful, merge is successful, allot shares, not successful, delist, and you send money back. All of this is hypothetical. Permission required. Anything which has a factor of any eventuality which is not certain, better to take permission. So spend that time and get it. SPAC, SAFE, FISC, some terms which we don't understand. If you don't understand a term, please ask. If you don't ask and still not figure out, go to RBI. Agreements are so complex nowadays. For example, I'll tell you, there's a company, resident individual invested in fully convertible preference shares with tenure. Post tenure, optionally convertible. Fully convertible preference share within certain period. Post that period, optionally convertible. What do? Debt instrument. Normal understanding is debt instrument. So if I just read fully convertible preference share, equity instrument, equity permitted for individual, or should I put debt classification? All these are complex nowadays. My gut feel is when you're obtaining an UIN, ask for agreements, memorandum, article of association, bylaw, whatever is incorporation, and start reading, sifting through them. A lot of things will be said which we take for granted. We just see the certificate of incorporation and proceed to write the FC. Start spending time on what is the content. Yes, sir, you're saying. Sorry? For example, there is some forums in India, angels, team of angels, a lot of names are there. You're an accredited investor. They will hunt for a investee entity and they will send all of you an email. All of you are accredited, KYC completed. You can participate in that investment decision. Nobody else other than the closed group can participate. It's like having a Mason or Freemason circle or whatever it is, no? So all of those are jargons. As far as you are concerned, you are solely and individually responsible for your ODI. You cannot be an accredited investor with a pool of funds sitting in India and presume ODI is happening all the while. Aisa nahi hota hai. Every ODI, every OPI needs a UIN. Either your UIN or if there's a significant larger investor. Example, I'll tell you, there's a, okay, I'll not name that, very big dating company. Multiple investors, film stars, movie stars in Karnataka, all invested. One bank account in Canara Bank in Bombay is a conduit, because that is where the largest investor was. So that UIN, that bank, that branch. So all of us have to go through that bank, that branch into that company. So your UIN may be different branches for different investments, depending on who was the first investor or who was the largest investor. So if you are group collectively investing as a group, 8-10 people of investing in foreign companies, every company will have a UIN tagged to authorized dealer branch. You need to go through that bank and that branch. For a foreign company, one foreign company will have only one UIN. Multiple Indian investors may be there, but the UIN will remain the same, consistent across all UINs. APR obligation, largest investor. FLA obligation, if there is an Indian entity, largest investor. If there is no Indian entity at all, only RIs are investing in that company, no APR, FLA. Obviously, because FLA is for Indian entity, not for individual. Why? Because individuals are subject to LRS limit. So there's a presumed limit of $250,000. Whereas unless the FLA is obtained, Department of Statistics and Information Management will not understand what is the exposure for an Indian entity outside India. So all of this is statistics. Dollar rates are flexible. DSIM decides what is the exposure of India on current account, exposure of India on capital account. That helps them transact dollars in the market. So unless the dollar exposure is reported to them, they have no play in the market. That's why they're strict with FLA. RI, the minute you do ODI, they presume $250,000 exposure, because there's a limit ceiling for every individual, PAN-based. So all of this is statistics going into some Excel sheet somewhere for an investment decision by the RBI. Quarterly they meet, Monetary Policy Committee. These plays happen there. Rather, these policy decisions are taken there. Plays happen with RBI in the market. So whatever you're reporting has some significance, has some end use. So if they get very angry if you don't do FLA on time. Banks get agitated. They react very badly with FLA. They don't react that badly with APR, not filing share certificate, all of those things. They don't react badly. With FLA, they react badly. So FLA spend some time. July 15th was the deadline. If you missed it by July 31, file it. 7,500 is fees. So much time do we have? What time do we close, by the way? 1:30. Okay. Yes, sir. 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 ಗೊತ್ತಾಯ್ತು. Correct. Okay. Simple rule. One, is it equity simpliciter? Participating in voting rights per one vote per share. No problem. Second, is it preference share? It's dividend based, cumulative, non-cumulative, exclude. Is it fully compulsorily convertible preference share? Include. Fully compulsorily convertible debentures? Include. Share premium? Include. Reserves and surplus? Include. P&L balance? Include. Anything else? I don't know. Leave it. Let somebody else worry about it. Don't certify. I'm telling you, ಯಾರು ರಿಸೈನ್ ಮಾಡಿದ್ದು? ಎಷ್ಟು ವರ್ಷ ನಿಮಗೆ ಪ್ರಾಕ್ಟೀಸ್? ಇದು ಮಾಡ್ಬೇಕಾದ್ರೆ ಗೊತ್ತಾಗಿಲ್ವೇನ್ರಿ ನಿಮ್ಗೆ? Really? Banks. Anyway, so don't certify. One, I can get another client. I cannot get my other COP. Bitpidi, huh? My grandmother used to say in Kannada, in Konkani she used to say, I don't know how to translate it to Kannada. And simply it means, if you live to tell the tale, you can beg and eat. In Konkani it comes out very well. It just means survive. After COVID, I've learned that is the best. Really survive, you live to tell the tale. ಮೆಕ್ಕಿದೆಲ್ಲ ಹಾಳಾಗೋಗ್ಲಿ. ಸ್ವಾರ್ಥ ಇಟ್ಕೊಂಡ್ಬಿಡ್ಬೇಕು, ನಮ್ ಸ್ವಾರ್ಥ ಇಟ್ಕೊಂಡು ನಾನು ನೋಡ್ಬೇಕು. ಆಸ್ ಅ ಚಾರ್ಟರ್ಡ್ ಅಕೌಂಟೆಂಟ್, ಮೇಬಿ ಸೊಸೈಟಿ expects that from you. Today, I'm finding it very difficult because society expects so much from us. Suddenly, they'll ask one question. I'll tell you, my nephew, American phone this thing, 1 lakh some exemption capital gains idea ನನಗೆ ಅಂತ ರೆಸಿಡೆಂಟ್ ಅಲ್ಲ ನೀನು ನಿನಗಿದೆಯಾ ನನ್ ಡೌಟ್ ಬಂತು ಏನು ಇಷ್ಟು ಗೊತ್ತಿಲ್ಲ ನಿನಗೆ ಇಲ್ಲ ಒಂದು ನಿಮಿಷ ಮೈ ವೈಫ್ ಇಸ್ ಆಲ್ಸೋ ಚಾರ್ಡ್ ಆನ್ ಲಕ್ಕಿಲಿ ಇವಳು ಕೇಳ ಇವಳು ಹೇಳ್ತಾರ ನೋಡು ಇವಳು ತಪ್ಪು ಹೇಳಿದ್ರೆ ನಾನು ಕೇಳೋಣ ಸೊ ಇಟ್ಸ್ ಇಂಪಾಸಿಬಲ್ ದ ಎಕ್ಸ್ಪೆಕ್ಟ್ the moon book ಓದಕ್ಕಾಗಲ್ಲ. See, I'll tell you, last month all these new books were published, Magema and all that. Suddenly I see the 2 book ido, direct tax Vinod Singhania, this big, then company law manual this big, then what is that 3 volume of income tax ido ಡೈರೆಕ್ಟ್ ಅದು ಹೆಸರೇ ಗೊತ್ತಿಲ್ಲ ನಂಗೆ ಡೈರೆಕ್ಟ್ ಟ್ಯಾಕ್ಸ್ ಮ್ಯಾನ್ಯಲ್ ಮತ್ತೆ ಇದು ಚತುರ್ವೇದಿ ಪಿಚ್ಚಿಸಾರ್ಯ ಮತ್ತೆ ಅಲ್ಲಿ ಗಂಗಾ ಪಾರ್ಕ್ ಓದಿ ದಟ್ ಹಸ್ ನಾಟ್ ಬಿನ್ ವಾಟ್ ಈಸ್ ಅಪ್ಡೇಟೆಡ್ ಫಾರ್ ಇಯರ್ಸ್ ಬಟ್ ಸ್ಟಿಲ್ ಇಟ್ಸ್ ದೇರ್ ಅಟ್ ಆಫೀಸ್. ಇಷ್ಟು ಬುಕ್ ಎನಿಬಡಿ ಕಮ್ಸ್ ಹೋಮ್ ನೋ ದೇ ಥಿಂಕ್ ಯು ಆರ್ ಸಾರಿ ಐ ಡಿಡ್ಂಟ್ ಸಿ ಯು ಸರ್ ಗೊತ್ತಾಗಿಲ್ಲ ಅರವಿಂದ್ ಆತ ಅದು ಯಾವಾಗ ಬ್ಲೂ ಕಲರ್ ಬುಕ್ ಅಲ್ವಾ ಓ ಇನ್ನೊಂದ್ 4,000 ಖರ್ಚು. ಸೊ ಇದೆಲ್ಲ ಮನೇಲಿ ಇರುತ್ತೆ ಎವ್ರಿಥಿಂಗ್ ಲೇಟೆಸ್ಟ್. ಮೈ ವೈಫ್ ಲವ್ಸ್ ಡೂಯಿಂಗ್ ಇಟ್. ಶಿ ಇಸ್ ಗುಜರಾತ್ ನೋ ದೇ ಗುಜರಾತ್ ನೀರ್ ಕುಡಿದ್ಮೇಲೆ ಏನೋ ಆಗುತ್ತೆ ಅವ್ರಿಗೆ. ಫುಲ್ ಲೇಟೆಸ್ಟ್ ಇರುತ್ತೆ. Then anybody comes home, they think we are somebody spending all the way reading this, no? Book so CS, we live in a very difficult times. I'm telling you, off with NFRA, peer review, this thing 3 years, sir. That 2024 something they extended, no? Peer review. Varsha parashtotike practice biಡ್ಬೇಕು. ಬೇರೆ ಏನೋ ಮಾಡ್ಕೋಬೇಕು, ಪುರೋಹಿತರ ಆಗ್ಬೇಕು, ಏನೋ ಆಗ್ಬೇಕು ಬೇರೆ. ಅವ್ರು ನೋಡಿ ಎಷ್ಟು ಸಂತೋಷವಾಗಿದೆ ನೋಡಿ. Chidanand is now become a full-time wildlife photographer. He is lawyer, but he's given up his CA practice. He has left us in the stranded. Anyway, sorry, coming back to this. But if you don't understand the instrument, please exclude. If you understand the instrument, include. These agreements are also quite complex. Sometimes I feel, I don't know, maybe it's something our PwC partner is here, Aditya. Sometimes we may need a legal opinion on whether it is a equity or a debt instrument from a lawyer, just because you are not able to read and understand the agreement. There are so many complex agreements, especially in startups. These agreements are so complex. I don't even know sometimes whether it's a debt instrument or equity instrument. Better to ask for a legal opinion and get it in writing whether it's a debt or equity instrument. That is the complexity in today's world. Sorry? No, it's okay. Sorry? No, I understand. As far as the chartered accountant is concerned, as far as certification exercise goes, attest function goes, reasonable due diligence. And my reasonable due diligence is I have relied on an opinion for that one aspect. I cite it and I get out of it. If I don't cite it, negligence. Or what do you say? Bad behavior, indiscipline. Cite that and I'm done. Attest function, certification function, compilation gives you a little bit of liberty and flexibility. Audit may not give you. So at least in these functions, take that liberty and, another thing, every FEMA certificate issue has to be backed by letter of representation. Anything, LOR from client, vital. Just don't presume that it's sign ಮಾಡ್ತಾರೆ. And see, what we do is we usually have a front page certificate and there's an annexure detailing numerics and all that, no? Just because he signs there is not enough. LOR, engagement letter, certificate, LOR has to go in the file. Without which don't sign any certificate, sir. An honest thing. Sometimes what happened, compounding matters happen. You compound the matter, no? Then they say bring all the documents vis-a-vis this. Who is the CA? Can you ask him to come? They don't like CAs in compounding. Alva, others. They don't want them to come. They've written it. Please come yourself. Don't get your CA. But if the CA certificate is faulty, the CA should come. Then your defense is engagement letter, certificate, LOR. So be careful. Every FEMA certificate, whoever it is, NRI, sometimes, I don't know, I should not say this. The worst form of clients are OCIs and NRIs. Troublesome, too many questions. Once they go outside India, no, they believe India is some third world Sudan. And the questions they ask, what they want to do, aggressive behavior when they come back, it's problematic, especially with NRI OCI clients. Take LOR, right? Make them write and give it in writing. They're some of the most troublesome clients you'll have. NRIs, my entire family is NRI OCI only, but still, I don't do any business with them. They're cranky, cantankerous. The resident individuals, at least they'll say, Guru, Madbe Guru, because he's also here next day, no? Neighbor, friend, he lives in Bangalore. You see him at least. NRI OCI, you not even see. Be very careful with these NRI OCIs. So we'll continue. Sir. No, nin copy larko. In your copy, you tear it and put it in dustbin. In my copy, it will remain. Do not budge, sir. The minute chartered accountants start budging, no, they will insist the word. This is my certificate. If you want it, you take it. The minute I sign it, my bill is there, ready, with GST. Pay it. Huh? Yeah, of course, do it. Do not budge on a certificate. Do not back off. No matter how big a client. Sometimes I'll tell you, our compulsion becomes, he is my main client. He is my 50% client. He is my 40% client. Let them figure out some other way to finish the transaction. Minute you step back, no, they'll exploit it the next time. Last time, kotre. Don't give it. Minute you budge, they will exploit. I remember a senior partner in I'll not even name the firm. Audit of major MNCs. The major means really big MNCs. Audit paper will come for signature. He will not sign till such time is convinced. Well, obviously, audit procedure is over. Invoice is gone. Check is ready. Form 16A is ready. Idu mooru barovargu audit sign madala. I'm not kidding. Bad va. Tago. Oktar. That is how we should be. This world is not for. They hate us. I worked with regulators in Delhi. They hate chartered accountants because we have diluted ourselves to such an extent that we are. Be aggressive. If you don't want to do this job, don't do it. Go play cricket or do something else. Yoga madi, but in my way. Sir? Yeah. It's just the government has a policy of distrust vis-a-vis CA Institute. Our leader came and insulted us in our premises, and we sat back and watched. Yeah. Okay, don't trigger. So, anyway, so OPI, just make sure that OPI has a separate limit. OPI cannot exceed 50% of net worth. OPI is investments in portfolio investments outside India, so it cannot exceed 50% of net worth as per RBI. So stick to that. Latest audited balance sheet, again, vintage of the balance sheet cannot be more than 18 months. Listed Indian entities have an option to reinvestment OPI proceeds. I have OPI, I sold it, I reinvested. No need to report automatic. But in form OPI, report the acquired. But divestment, valuation, etc., no need to be reported. But unlisted Indian entity or OPI investment or resident individual OPI investment, divestment section G of form FC has to be completed, filed. Only then money will be credited to your bank account. And reinvestment has to go back from India. It cannot be reinvested there. So, resident individual, I think we covered most of this. ESOP. Okay. ESOP can happen in two manners. One is employee stock purchase plan. Purchase plan is ODI or OPI, actual wire of money. ESOP is option to purchase. Yes, I may purchase, I may not purchase. The minute I purchase, I have to wire, then reporting happens. Minute I purchase, I don't have to wire. Bank or the company has to report in form ESOP to RBI saying these are the allottees through the AD. If I have to wire, I do the wire and I go under ODI or OPI rule, depending on whether I get control, depending on whether I don't get control, depending on whether it's more than 10% in the entity or less than 10%. ESOP can be remitted directly to the company, but usually it doesn't happen that way. There are trusts which are standalone, which hold treasury stock of, let's say, I'll use an example, IBM again. IBM has, let's say, assume that IBM will have a trust. That trust will hold treasury stock. Out of the treasury stock, ESOP is allotted to India, Pakistan, Vietnam, wherever it is. And whoever sells will sell back to the trust. So trust becomes a vehicle for carrying ESOP or purchase options or shares. You can wire that special purpose vehicle also. He did not wire to the entity. Otherwise, wire to the entity, entity purchases. Entity sometimes under certain jurisdiction cannot purchase its own shares. For example, India, you can't fund your own share acquisition, either employee for employee purposes or otherwise. So be careful. Treasury functions, special purpose vehicles can also be ESOP carriers. So trust society, special exemption for education and hospital sectors. Mutual fund, alternate investment fund, venture capital fund. Sometimes maybe it's time to spend some time on this because AIFs in IFSC give good returns. Good returns because it's dollar plus return. If you get it, depreciation of dollar is about 18-20% in last 2 years, plus returns. So this may be something which we need to start seriously looking at. Yeah, if you are able to get into as a buy units of AIFs there, it's available. Sorry, there are some mosquitoes here, so I will keep moving back and forth. Okay, so OI and IFSC by a person resident in India, same thing. Resident individual can also invest under OPI, ODI route in an IFSC unit, registered in the IFSC unit as a AIF for family offices, for consolidation, for investment downstream. Yeah. Let me see pricing guidelines. Okay. Before this, let me come to this. Pricing guideline. Why I wanted this is okay. This is my discussion on valuation vis-a-vis valuation certificate for a ODI divestment. What a bank looks for today, all these powers of recording the transaction of divestment is given to bank. Divestment, UIN cancellation is done by bank. So minute you divest, sell the foreign company share to a third party, you receive the money. Once you receive the money, it goes and sits into a Vostro account. It's not credited to you till such time compliance is completed. Now, what compliance is required? Section G of Form FC, obviously. Valuation certificate dated prior to the date of transfer. Remember, dated prior to the date of transfer. If it happens post the date of transfer, bank will say valuation certificate not valid. Now, in the valuation certificate, the exact words they are looking for. Methodology, internationally accepted method, that they want that word. Net worth based, DCF based, some other based, they don't care. These words of internationally accepted method of valuation has to necessarily exist in the valuation certificate which you obtain. Ideally from a CPA outside India or CA outside India who is competent enough to value a foreign company in that jurisdiction. Indian chartered accountants should ideally not certify valuations of foreign companies. Indian RVOs should ideally not certify valuations of foreign companies. Why I say that? Jurisdictional changes we may not understand. For example, threat of license, 2G license we saw. Humongous valuation went down the drain because Supreme Court said this license is invalid. So we don't understand sometimes the jurisdictional issues, startups. Benefits have been withdrawn by local jurisdiction. We don't know. Sector, oil and gas, minerals, troublesome sectors. Valuation, we will not understand. What is with the license, how much you can encash. So don't touch valuation certificates, ideally, of a company outside India, unless it's backed by a valuation certificate there. Ideally, CPA outside India or CA outside India should sign it. Assumption and data they want. What are the assumptions on the basis of which this valuation report has been prepared, and data backing those assumptions. Audit required, audit not required. Specific disclosure in the valuation certificate that this valuation certificate is based on audited financials for the year ended / unaudited financials for the year ended / because that jurisdiction does not require audit for this type of entity. Arithmetic of calculation. Every numerics has to be calculated. If DCF, then how free cash flow has arrived over the years, what discount rate, all of this has to be specifically done. Current shareholding, authorized shareholding, paid up capital face value. Oh, thanks, sir. Thank you. Current shareholding, authorized shareholding, paid up value, face value. Face value 10. Paid up value 8. Obviously, there could be two different things. Paid up value premium. Paid up value in value terms, membership interest terms, number of shares terms, number of unit terms. I'll tell you what all complications are. LLCs, membership interest, limited liability corporations in the US is membership interest based. There is no number of equity shares into per equity share equal to total value to be remitted. There's no such thing. Membership interest. Membership interest, they don't understand. Percentage membership interest, no bank in India understands. They want 1,000 units, if not equity shares, they want 1,000 units into $10 per unit, $15 per unit equal to amount to be remitted. So if you say this is for 15% interest in the company, this valuation certificate is not going through. I'll challenge you, any bank in India, they will not understand. So how do you fix this? Especially for LLC units, number of units, board resolution there, putting that membership units, rather interest into units, number of units into per unit held by Indian individual into number of per unit valuation equal to this thing. Otherwise, this valuation certificate won't go through. Exact wording, they want this wording. In our opinion, comma, based on above facts, comma, we confirm that fair value of overseas company as on date dash using valuation method dash is FCY dash per equity share or per unit, and face value per equity share is FCY dash, divestment is FCY dash amount. Last audited balance sheet, 12 months vintage here. Source of data, please mention the auditor or not. We talked about this. Valuation certificate should be within 90 days of date of transaction. Shareholding pattern mentioned in valuation certificate should match with project profile and section G. This is another disaster. Okay. Now what happens? I invest, I obtain unique identification number. I have a unique identification number. At that point in time, I would have given a CA certificate saying I'm investing in 100 shares, $10 equal to $1,000 I'm sending out. Year one closes. It still remains 100 units, $10 is equal to 1,000. Then year one APR, I may have percentage change from 50% to 40%. If I fail to report the APR, the project profile of the UIN is not updated. It still retains 50% holding. It doesn't show year one, 50 has gone down to 40. Now, if there's a project profile which is not tallying with your APR and your original investment, this valuation certificate won't go through, the divestment process won't be credited. So all these three things should be speak. One is section G, when you're saying FC, I divested 50% of foreign company. 100 shares into 10 equal to $1,000 I invested. I divested for $5,000, 4,000 gain. 100 shares into $50, I divested 5,000. Percentage shareholding was 50 when I did my UIN, was 50 when I did my APR, was 50 when I divested, no problem. Section G will match to project profile. If any of these factors have changed, section G will not match to project profile. Project profile completely dependent on APR. So when you're typing your APR, don't be negligent. The APR will crystallize your percentage shareholding in the foreign company as far as project profile is concerned. You cannot change it afterwards. There's no methodology other than APR to amend project profile. Banks also don't know. So if it doesn't match, the divestment process will not be credited. There are times when it has to be repatriated back after charges. Sent, return to sender. That also happens. So be very careful on this. I will talk about this, come back to this. Yeah. 10 minutes. Debt, possible. I have a ODI investment in foreign company. Debt is possible. I can give loan myself. Or I can guarantee a loan which he has taken outside India as an Indian promoter or Indian parent. I can guarantee his loan. I can pledge my assets for his loan. I can pledge his assets for his loan. I can pledge his shares for his loan. I can pledge my share for his loan. All of this is ODI permitted. Yeah. So all of this is permitted as long as you report it in Form FC. Every time there's a guarantee issued, Form FC. Every time there's a pledge done, Form FC. Anything which alters the asset and liability of the Indian entity overseas, Form FC. Else, for example, I pledge my Indian land for foreign company loan. I didn't file Form FC. Repatriation can't go. Pledge is not recognized. So foreign banks will insist on pledge being reported. Okay. Deferred payment we talked about. Mode of payment, obviously, has to be through banking channels, no cash business. Funds held in account maintained in accordance with FEMA. Earlier, there used to be exemption for EFC remittances. If you made EFC remittances, net worth would not apply, criteria would not apply. Now that is gone. So even if you have dollar funds, if you are making a ODI, then EFC exemption for net worth or financial commitment is gone. Holding subsidiary net worth included as consolidated basis for 400% net worth gone. So it's become more stringent. ADR, GDR proceeds or ECB can also be used. Their net worth doesn't apply. If you borrow external commercial borrowings for ODI purposes, no problem. 400% net worth doesn't apply. If you have a ADR, which means your shares are listed in American stock exchanges, depository receipts are issued, funds obtained, that can be ODI. Obviously, because it's foreign source funds, dollar based, you are earning your dollars to ODI. GDR, global depository receipts. Yeah. Every time you make an investment, every time you get a right share certificate has to be obtained. Share certificate has to be in a format which discloses units or shares in numeric terms, unit or shares in face value terms, unit or shares in paid up value terms, equal to total consideration received from Indian. I'll tell you why the problem comes. I send $1 million, $10 lakh for acquisition of equity shares outside India. Net of bank charges, $9,99,000 spent. $1,000, whatever dollars is net. You remitted 1 million, share certificate is not reflecting 1 million, problem. It becomes a humongous problem at the time of divestment or APR reporting. They'll come back to you. This is not matching with amounts remitted. Please rectify the situation. You cannot remit again. So whenever the remittance goes, net of charges remittance has to go. Minus all charges to sender, minus all charges, 1 million credited to that bank account. Then you get a share certificate of 1 million. Units per share equal to 1 million. Everything should be clearly mentioned in share certificate. Share certificate should be stamped. For some reason, we like stamp on share certificate, company seal or stamp. Even if it is US company, where there's no requirement to stamp it. There's no common seal at all. But still, they prefer stamp. Without which, share certificate will be returned. And if you don't deposit it in 6 months, you have LSF, late submission fees. Your problem, not the bank's problem. So when you're receiving share certificate, tell them, sir, seal haki. Seal illandre. What I've realized is a good answer is, in America, notaries have this sticker, red sticker, starred sticker, no? That sticker is available. Put the company name, put that red sticker, make it look authentic, they're happy. Or put seal, they're happy. But without seal, without sticker, they don't take. So do all that. I'll tell you, El Paso, Texas, one of my clients, peak COVID. I'm telling you, COVID in Texas and Arizona was really, really, really bad. You can record it. I have seen the dead bodies could not be buried. So there were refrigerators, big refrigerators on back of truck where dead bodies were there. That is how bad it was. And bank was asking us for share certificate with seal. We had to get a seal done in that. Large transaction. That is how merciless this, these banks are when it comes to compliance. RBI was 1,000 times better. Going to the RBI was a pleasure. They knew what they were doing. We knew what they were understanding. They would slap you in the face, or at least you know you got slapped. Here you don't even know what's happening. No, it's a shadow boxing. Unbelievable this is, where it's going, no? And all the kids in banks, 21, 22-year-olds, wanting to go evening party, my farm is pending, sir mujhe jana hai, wo wait kar rahe mera. In that situation, I will explain FEMA to him. Idiots. There are 3 banks whom I will not name. Some of the largest banks, jokers when it comes to compliance, no? Huh? Small banks are better. Some really, I'm telling you, one of the best experiences I've had ever. Karnataka State Apex Cooperative Bank. They care a damn what RBI give you, yaar bada. I will do what I want. They're the best bank to do business with. Tumkur Mercantile Cooperative Bank. Tumkur Green Merchants Bank. Super bank. Really, you go and ask them something, they'll send some 50 people to your office. Done. Close matter. Really? Huh? PSUs are good. Sometimes I'll tell you, Bangalore based, I know there's only one now, it used to be many, but we are jokers again. Karnataka State lost the most. Bangalore, Canara Bank. Head office is there. At least human being you can see on the other side. Really, I'm telling you, no telephone, no this thing, no, at least best. Go through PSUs. He will say multinationals won't like it, but go through PSU. They won't be permitted, poor fellows. See, it's not their problem. They won't be permitted to go beyond their approved bank network, no, internationally. So they have a challenge. So Form FC, APR, OPI, I think we covered most of it. Late submission fees, 3-year window. Up to August 2025, Ganga Snan you can do. Clean up all the non-compliances, pay this LSF and be done with it. Move on with life. Really, I'm telling you. This is a Triveni Sangama. So it's like Srirangpatna, no? Sorry, sir? Huh? Yeah, Srirangpatna. Huh? Hey, don't say loudly, sir. Your tap water is around. ಅಲ್ಲಿ ಹೋಗೋಣ ಒಂದು ವರ್ಷಕ್ಕೊಂದ್ಸತಿ ಇಲ್ಲಿ ಹೋಗ್ಬೇಕು ಸರ್, ಜೀವನದಲ್ಲಿ ಒಂದ್ಸತಿ ಅಲ್ಲಿ ಹೋಗ್ಬೇಕು. Yeah, I agree with you. It's Prayagraj, not Allahabad anyway. So ODI in startups cannot be made through borrowed funds. I don't know what this logic is, but ODI in startups cannot be made out of borrowed funds. LRS cannot be out of borrowed funds. ODI. Individuals cannot borrow funds and make ODI. So borrowed funds restrictions is there for startups also. This is when I said, when you're investing in startups outside India, be a little careful. Borrowing is not permitted. UIN mustn't. These are practical aspects. A few I listed down. Let me see how much I can cover. LLC we covered. Valuation reports. Multiplicity evaluation. Himanshu talked about it. Registered valuation officer for FDI. Merchant banker for $5 million in about transaction. Must and should. Finding a merchant banker is very difficult in Bangalore city. So usually they're all Bombay based and this thing. CPA is best outside India, but CPA certificates don't work for more than $5 million. Step down reporting. SDS reporting is mandatory. Every APR now, SDS step down subsidiary reporting is no longer within 30 days of transaction. It is as part of APR process. Correct? So every time there's a step down subsidiary which is happening, APR should clearly say which level the step down subsidiary is, level 1, level 2, only 2 permitted, or foreign entity itself is APR you file for foreign entity, step down subsidiary 1, step down subsidiary 2, make sure you report it if there's an acquisition. How the acquisition was made. Did I make the step down subsidiary through wire transfer for equity shares, or did I swap shares for acquisition of step down subsidiary? Was there a merger, or rather, was there a demerger, or was there a corporate action backed by a court in the local jurisdiction? All of this has to be written in the APR clearly. Restructuring reporting. When you do a ODI, when you report your APR, when you're signing as a chartered accountant the APR, look at the investments column in the balance sheet. You'll be surprised. Many times the investments column will show an Indian entity. Many times the investment column will show a new entity. Previous year figure to current year figure, suddenly the investment value has gone up. Investments column. That triggers SDS reporting. If at all there's a step down subsidiary. If there's an OPI at that level, no a subsidiary at that level, below 50%, no need to report. But if there's a SDS, report. If there's an Indian investment, report. what they call round tripping is a bad word because it's not an impermissible. All money is coming back in need not be for tax purposes. So if the impermissible tax transaction, it's called round tripping. But if the money comes back in for legitimate purposes, I don't know whether it's really round tripping, but if it does come back, then you have to report it because it's not permitted. SDS reporting, restructuring, Africa. Kenya, Nigeria have devalued their currency in the last 3 years. So whatever money you invested in those days is no longer in the same dollar term as today. Because devaluation of currencies happen. That also has to be reported because the expected dollar is not the dollar which are emitted. Externalization problems, for example, Sudan, Mozambique, another 2 countries we dealt with. There are a lot of countries where Turkey, for example, today dollar coming out is very difficult. So if you divest, dollars need not come out. So no other currency is convertible foreign exchange. Same problem. Exactly. So all of these externalization problems have to be reported. Delayed receipt has to be reported. Permission has to be obtained. It will sit there till such time externalization happens. So when you are looking at jurisdictions, don't always presume that the value is as it was. The value may change. Turkish investments are all now almost 30% dilution over 6 months. So if you're going to Turkey, this is a good time. A lot of Turkish rulers in Karnataka, no? Bijapur was set up by Yusuf Adil Shah. Ottoman Murad's son ran away because Mehmed became king. When Mehmed became king, they killed all the brothers. Yusuf ran away and came to Bijapur. He set up the Adil Shah kingdom, Bijapur itself. All Turkish, I'll tell you a lot of stories on Turkey. So anyway, resident individuals cannot transfer OIB. Okay, gifts. This is a very common thing. Gifts and inheritance. If I'm a resident individual, I have a ODI. I can gift it to another person in India. I can gift it to a non-resident. By inheritance, I can will it to somebody else. No problem. As long as I comply and that fellow is complying with it in the future. Gift and inheritance, no problem. Can a non-resident gift to Indian resident? Answer is yes. Non-resident can gift to Indian resident who is a relative as defined under Companies Act. Non-resident gifting to non-relative in India is donation under FCRA. Requires MHA, so one-time permission. Non-resident gifting to non-relative requires donation, FCRA, one-time permission. Hello, sir. So be careful. So gift is not like before. There used to be this Amiyanti, then Dana Corporation, all these gift transaction. No, corporates used to gift. Today, corporates cannot gift. Love and affection cannot display it between 2 corporate bodies. Correct? No, gift is love and affection. Corporate bodies cannot display gift. So be careful with gifts. Be careful with inheritance. Be careful with HUFs. HUFs cannot do ODI. HUFs cannot do ODI. HUFs cannot hold ODI under inheritance, will and all that. So be careful when you're structuring this. Maybe in another 6 months, we won't talk about it. HUF will also go. Uniforms will come. No more than 2 layers of subsidy, we talked about it. Rights issue, we talked about it. ODI in startup. Share certificate, seal, US certificates, we talked about it. Banks, whenever divestment happens, be ready. Banks will ask for original remittance documentation. Banks will ask, even if it's done 6 years down the line, original Tapal-based remittance documentation. Bank will ask for original Tapal where you submitted share certificate for all issues. Original. Bank will ask for all APRs Tapaled with bank because these are manual submissions. FLA's acknowledgement from FLA IR website, acknowledgement sheet for all the years when you held it. If you don't have these 4, rest assured the money is going back. So do your homework and valuation certificate dated prior to date of transfer. Date of transfer, another thing. when you're drafting agreement, when you say date of transfer is the date of this agreement, be very clear. Date of transfer will be the date on which money is remitted to the seller. Problem. Date of transfer is date of agreement, because date of transfer is written everywhere. If you say date of transfer is the date on which money is remitted, which means it is some other date other than that date. And that date you have to go back to the EBRC or FIRC or whatever the transaction date is for wire. Another date comes into being. So date of transfer is vital when it comes to doing divestment, including investment. Be very clear in your agreement, say date of transfer, date of agreement. And payment terms, 60 days. That's a different matter. Date of transfer is today, payment term 60 days. Within 60 days, you don't pay, transaction reverts. So be very careful when you're writing. These are practical problems, but proceeds won't be credited. Another thing which they'll ask for is large transactions. Once it hits that 5 million threshold, no, banks panic because they have credited to your account, and scrutiny is compulsory. RBI will scrutinize this through the audit process. Once that 5 million, so they will ask for shareholding percentages as on the date of investment, Indian, foreign, as on date of divestment, post divestment. Get a CPA compilation certificate for that. It eases your problems, especially for large value transactions. Again, I think we have discussed most of this. These are statements which they made. Okay. Initial investment by investor was affected on dash date. However, no amount has been repatriated to India. Kindly provide a plan of action, preferably tentative days for investment company to repatriate earnings from investment capital. Bank is asking. I invested in ODI in a foreign entity. What the bank presumes is, law says is it should be an operating company, bona fide business. It need not be a profitable company. Banks don't understand it. If you are having successive losses, bank will ask you, where is any repatriation for this? Continuous losses, then they will ask you bona fide business activity, holding only real estate, not permitted. Holding only the asset with no earning, no movement in P&L, not permitted. Operating company means P&L has to move positively or negatively. Negative, they panic. They ask you for confirmation whether it's actually into bona fide business, reason for loss. So be very careful. Just invest. I want to invest. I will put it in a real estate there. Hold it. ODI is not for that. LRS is for that. ODI is not for holding a real estate outside India. Real estate trading is specifically prohibited. Continuous losses we talked about. Mismatch in invested capital. Again, sometimes what happens, transaction invested capital, let's say is $1 million. If the balance sheet of the company is restructured, everybody, LLCs, every member in the LLC will be given proportionate share of losses. It's like partnership accounts. Capital account, loss, net. If that net happens, you are supposed to report it in APR as diminution. Self write-up up to 25%. If you don't report, mismatch continues. So be very careful with LLCs. They just push losses into the member capital. As evidenced by the financial statement, JV has not undertaken any trading operation. Kindly justify. Real estate holding, not permitted. Trigger for violation. Trigger for compounding action. One more thing was there. Yeah. This is what the bank asked. LRS at the time of divestment, simple $490 divestment. Initially invested, then that became a big company. $490 came back. Request letter along with dash for divestment. Form FC duly signed. Okay. Copy of MT103, bank's document, internal. Board resolution of Indian party, individual. Imagine they're asking this, LRS. In case of buyback, capital reduction, liquidation, board resolution of foreign entity. In case of transfer stake of foreign entity, sale agreement signed between both parties or buyback offer documents with consent. broker note or sale of recognized stock exchange, evidence of capital reduction, NCLT court order for merger acquisition, valuation certified by chartered accountant, CPA, merchant banker registered with SEBI or merchant banker investment banker as per host country, valuation arrived basis any internationally accepted pricing method on arm's length basis. Even if it is by this thing. Liquidator's report certificate prepared by official liquidator as applicable. Valuation not applicable if sale is on recognized stock exchange. Imagine this is asking for a simple $490 remittance coming in. Documentary evidence of closure of foreign entity in case of winding up. Latest audited balance sheet of overseas concern, foreign entity. In case of delay report and divestment, obtain letter giving reason for delay. If application received 30 days from this. If you answer all these questions, no, it's might as well not do ODI. Be ready. If you're doing ODI, if you're doing OPI, your client should be briefed in advance that this is going to be troublesome. Is it worth the money? Will you get enough out of it for going through this entire process? Remember, any violation will enter your CIBIL report. The minute it enters your CIBIL report, your ability to raise finance becomes problematic. So be careful. These rating agencies are crazy. So your credit cards won't be available for a client. So if you are ready for ODI, you should be ready with compliance. These are the questions they ask. You should be ready for this. Otherwise, don't do it. ODI, OPI is better. OPI simply, if it's less than 10%, OPI is the best thing. If you really want to set up, you want to create a business outside India, be ready for this. Cost. See, all of this I'm saying is because chartered accountants don't factor all this in their fees. If you don't tell them, they won't appreciate the challenges involved. Unless the challenges involved are appreciated, your fees will be whatever is one set. It is not a certificate fees. It is advisory fees. So be careful. Negotiate right. Be on the right side of the this thing. Sometimes too much time value you spend on this and you won't recover. It's not professionally satisfying. So be careful with OPI. Get into it if you're ready. We'll stop here, sir. Oh, 1:40. Sorry, I ate into your lunchtime. Usually they give me sessions after lunch to keep you awake. Sorry, I kept you from lunch this time.
Even in the busiest season of income tax filing, due date fast approaching, more than 80 members participating in this one-day workshop on FEMA. That shows the importance of the subject and scope and practice. Have working papers, enough working papers rather, engagement letter, letter of representation, and many more caveats was given by Vivek Mallya, sir. The topic on overseas investment paradigm with rules and regulations was very well dwelled upon by clearly bifurcating rules and regulations and many more caveats. A round of applause for CA Vivek Mallya, sir, for that fantastic session. Thank you, Vivek, sir, for that fantastic deliberation. On behalf of members present here and all the managing committee members of Bangalore branch of SISFICI, would like to hand over a memento to as a token of gratitude and respect. Can I request CA Pramod R. Hegde, Vice Chairman, to come out to the dais and then do the honors. Thank you, sir. Now let's break for lunch. It's arranged on 4th floor. Let's reassemble sharply at 2:25 p.m. for next session by CA Advocate Chidanandara, sir. Thank you.